Next layer for us memo is this. This is from Redfin. High housing payments are slowing home sales, but buyers could get relief soon. Are you buying that at the time? We didn't even go to the article yet. Are you buying the headline?
How? Just how? How?
So the answer is no. Not buying the headline. Okay. Well, okay. So I have some data to support this. High housing costs and elevated mortgage rates are totally killing us when it comes to affordability.
Yeah.
The relief they're talking about, I don't think the word soon is correct. I think it's still going to be months away because there's still a lot of dust settling with the new administration coming in. With the 2024, all the economic data being kind of like sealed up now in January and in February, we're going to get all those look back kind of reports of how did really things fare in 2024. And that's going to set some pacing for, well, what does the Fed do?
Yeah.
And will the bond market follow the Fed? And will the mortgage-backed securities follow the bond market?
Let me just tell you. So we're going, high housing payments are slowing home sales, right? It's true. We enter 2025 with an average rate of 7.7 1/8. That's crazy. Like this is the least affordable time that we're having, and we see this. Buyers, first-time home buyer loan applications have been drastically reduced.
Yeah.
So it is just like I don't buy this. It's not going to happen. We're still facing a shortage of homes, so therefore this correlates with everything else that we're doing, and there's a reason why there's an executive order, to make homes affordable, and there's executive orders stating that, hey, this is the things that we're going to try to do to facilitate, builders to want to go out there and build. But how long does it take to build? Right? Like I'm in my project. I'm like almost 2 years.
24 months,
you see
36
that?
months.
So this is not months. You're like, this is going to be a long journey.
It's a years long problem that
Exactly.
we're maybe at the epicenter of.
And I mean, you see here the median U.S. monthly housing payment is $26.86.
I'll take that.
The highest level in nearly 7 months, as of the 4 weeks ending in January 19th. Right? Housing. It's expensive
for people that it was $1,800 a year ago or 2 years ago. That's pretty steep. In our area, dude, I'll take $2,800 right now.
Of course,
I'll take 2 of them. How many do you want?
Exactly.
You want 2?
No, luckily I don't need it. Right, like. But if it can be that, yes, I take 20. You're right. I take 20 of them.
Yeah, I know they're citing other factors like cold weather in this place and the fires in that place, and that's part of this. That's a little going to be like a little asterisk disclaimer when you look back at the graphs and charts that kind of show all of this. Yeah. That stuff's going to be there, but really the information is pretty dour when you look at the top. We're going to come to this in just a minute. I don't want to get ourselves too far ahead here, but you're going to see in the top 50 metros that they use to collect this data for this article, man, some of the numbers are pretty stark.
Yeah.
And
well, let me just share with you here. In 2024, I got this in the article. In 2024, first-time home buyers accounted for 24% of all home purchases, making the lowest share since the National Association of Realtors began tracking this data in 1981.
Yeah, I saw that. That's pretty bad.
That's crazy.
That's really bad.
That's just to tell you where we are. 1981, we're going way back then. Are you yo, sorry.
That's a long time ago.
That is a long time ago.
That's almost how old I am.
Right?
But one of the things, I should say one of the things I think that there's for reference is typically first-time home buyers is 30 to 35% of purchasing. And this is, obviously the outcome and the impact of higher mortgage rates, cost of money. You have the job situation with people and their earnings and wages. And again, pundits and politicians are going to yell from the top of the mountains when they think it's going to help them about how good things are and this and that. But then you get hard data like this and you're like, okay, well, wait a minute, hold on. This is the lowest we've seen in 44 years.
Yeah.
What, we're going to just breeze by that and not go, hold on a second. Hold on a second. What's that about?
So, and it says here, but buyers could get relief soon. Okay.
Yeah.
So in order for this to work out, what needs to happen? Rising home prices have to calm down. They have to start, just chill out, right? Higher mortgage rates. They have to start just ease up, right? Then limited inventory. Well, that means we need more inventory. When can you get these 3 things together? Are we getting that anytime soon?
Probably not anytime soon. And I think the only way to get them bulk is with multi-unit housing, which we saw an increase in permits in 2024 for. And so, I had mentioned this many, many months ago where I was like, I have a new number I'm watching, which is the price per square foot, regardless of unit type. Yeah. And that has been dramatically increasing because they're decreasing like the example in the article was, we're decreasing the size of like patios and accessibility points and this and that. But the price per square foot is going up because it's on townhomes, multi-unit properties. So let's say a fourplex or something like that. So I think that our best chance of getting inventory is when there's one structure that has 4 units, that those 4 units can all be afforded by the people applying for them, and they're at a lower price than a single family house. That's my shortest term solution, which is still for most developments 24 to 36 months out, or 2 to 3 years. Sorry, I'm gonna stop using months. 2 to 3 years on the horizon.
Well, everything we're starting to see, Andy, now you're seeing it's not being built like it used to. Here's single family. No. Everything is townhomes. When you go to the Otay Ranch Mall, you see how many condos are there.
Yeah,
it is just crazy. The new Los Angeles. If you see the drawings of it. It's all just everything all cluttered in.
Yeah, I mean, you see, and so here's the interesting thing. In the Millennia Project that you're talking about down there at the mall, it's all brand new build.
Yes.
So all that is going to be this kind of more dense, urban, walk or bike everywhere. Now, in places like North Park, where there used to be a lot of more parking, that parking is now bike lanes. It's some restaurants that have spilled out into the streets or the sidewalk now. Yeah. And now that is becoming kind of that same way from a place that already previously existed for decades. Yeah. So you have the new build that's kind of doing that thing, and the old places that are getting kind of converted into that thing. Building more multifamily is probably our shortest term solution to some of the inventory of and affordability, 1-2 punch problem we're having. Long term, though, it is going to be doing that same play for a decade or maybe even for 2.
Again, I don't want to sound negative. I just want to be transparent with everything that's going on.
It is what it is.
People, even with this, when our buyers qualify, I'm really patting them on the back. I'm patting you on the back. Like I am saying, good job. I applaud you for that, because I know there's sacrifice into that. And for people that are afford and they're buying right now, perfect time to buy. Perfect time to buy. I share this story with people and they ask me well, do you think it's the right time to buy? You know how many people told me not to buy in 2006, 2007 when it was at the height of them, right? If I bought that same home now today, it's already doubled.
Yeah.
So I looked like a dummy back in those years, but now I look like I'm a genius.
You look like a genius.
You see what I'm saying? So we've seen over the data over the last 60 years, it's all about supply and demand.
Yeah.
And we continue to have a shortage of homes. So should you buy now? If you can qualify, got to do it. You just got to do it. Because one thing we know for sure, Andy, is our rates will go down.
They will. I think the time horizon is totally up for grabs on what that's going to be. And also, and back to your property value point, on a long enough time frame, it's just going to be worth more later.
That's it.
The later could be in 2 years, it could be in 10 years, it could be in 20. Back in 2020 when the initial shutdown happened, did you think that property values were going to go up 40% in the next 18 months? I didn't either.
And would I do it again?
But it did.
Yeah.
And so now we're here at our new normal where property values have skyrocketed and they've stayed.
Yeah.
And can I pivot into some nerd stuff? Is that okay?
Yeah, please.
Okay. So here's the pivot point. They've stayed because people are like, well, shoot, if I got to get the markets, what I got to pay, that's what I'm going to do. Yeah. So then they do that. Now, what the things I'm going to put some of these on the screen. Not all these will be on the screen, but one of these I wanted to show is the average sale to list price is 98.1%, which means that whatever the price is that's listed, they're fetching 98.1%. That's not a 10% price decline. That's not a 20% price decline. Yeah. That's not the investors shouting from the hilltops. Places are worth 25 or 30% less than listed. Yeah. Well, look at this. The market is saying it's worth 98.1% on average, and that's over all sales, which is kind of crazy. Now, another thing really quick. I want to talk about pending sales. Year-over-year change, down 10.1%, the biggest decline since October of 2023. And what do we signify October 2023 with?
Oh, my God, higher rates.
Highest mortgage rates. Yeah. Yep. Active listings, smallest increase in nearly a year. Month supply, 4 to 5 is considered balanced, and we're currently at 5. Now, I want to quickly point everyone's attention really quick to median sale price. Now, on the data here is from the 50 most populous U.S. metropolitan cities. Metros with the biggest year-over-year increase, Milwaukee came in at 16.9% on the high side. San Francisco, 5.9% negative. Wow. Negative 5.9%.
People are leaving.
So you have effectively a 23% difference between the highest increase place and the lowest decrease place. Now, not that it gets worse, but it gets weirder. In pending sales, only one metro of the 50 increased, which was Portland, Oregon. That's 1 out of 50. And in new listings, 18 out of 50 increased. And San Diego is not on the list.
Yeah. Do we want it to be on the list?
Well,
Please
for
don't.
new listings, yeah, we want more development.
Yeah,
but
more
I think that
development,
speaks to that whole permitting issue and, localized costs of living. So I know I'm getting deep in the weeds here on the data. Yeah. I'm going to flash our attention to this one. The 5-month supply of available homes on the market looks like it could be pretty steady for us coming into the summer and even the fall, where, interestingly enough, the last couple of years we've had an uptick of supply in the fall for the last 3 years since 2022. I want to quickly talk about... Oh, go ahead.
And I'm sorry. The reason why we're seeing the uptick is because we're starting to see interest rates increase, right? If the rates were low, I'm telling you, you have a lot more people that could afford. Affordability is better, and therefore there's competition.
Yep. One of the charts I want to show today is the homes sold in a median of 52 days, but it's not the 52 days part I want to focus on, Memo. What I did here on my chart is I kind of showed between May and August that days on market dramatically decreases. So those of you who are in the market right now saying, I'm trying to get qualified because I want to buy a house in the summer, also expect that days in the market could be shorter, which means you're not going to have 52 days and like kind of be a looky-loo this week, look at the same place next week, and then the third week in a row. No, not going to happen. So prepare yourself for shorter days on market as we get closer to the summer months.
And again, this is going to all depend in your area.
Yes. Yes.
Where there's more supply, you're going to see the tendency of home sitting on the market a little longer than, the average ones.
Yeah. So. And then last thing for me really quick here was the average home sold for 98.1%, which we already talked about. But on the graph, you'll see 2022 was this massive outlier with this huge price spike. This is back here locally. We saw people offering 30, 50, 80, 100,000 over list price in order to get their offer accepted. Sometimes 20 offers on the table, 30, 40 offers on the table.
And a lot of those people, they were outsiders. They were like San Francisco. You'd see them, Sacramento. They were coming over here, San Jose. They're like saying like, well, wait a minute. My house is way smaller. I can buy that over there, which is almost double. They do that. Similar like the people that are leaving California and they go to Florida and Texas and all that stuff. It's like, they're buying something that's going to be more square footage. And it's like, I'm willing to pay a little extra. That's where I'm going to stay.
A lot more bang for your buck.
Yeah.
So, I think what happened here since 2022, though, is you see that in 23, 24, and expected in 25, it's kind of, I'm saying, finally normal again, where maybe we'll stay kind of in this range where we have 2 years of data. You got the 2022 line, the 2023 and the 2024 line. Both are kind of in lockstep with each other, which to me gives me a little bit of a comfortable look back in the rearview mirror. Go, okay, then we could probably expect that prices are going to hold. So that's all I got on that.
Oh yeah, prices are definitely going to hold.
Thanks for giving
We're not going to be seeing foreclosures like we did in 2008, 9. It's just not going to happen.
It's not happening right now.
Not going to happen.
Something else in the economy will be breaking for that to then be the trickle down effect and the outcome effect of that.
Exactly.
So.